Now, that's the opening bell on Wall Street. Ringing the bell today is the Memorial Foundation in commemoration of Dr. Martin Luther King Jr. Day and his 97th birthday. Now, the Dow is beginning the day in the red with a big sell-off. I mean, this, of course, right, it's the first day of trading since the president announced those tariffs on European nations who don't support his Greenland takeover plans. Market, of course, was closed yesterday for MLK Day.
Right, already down. Look at that,
yeah.
600
Though
points.
not as much as the futures overnight. But I do want to bring in Joe Ciolli. He's the executive editor at Business Insider and the author of First Trade, a daily markets newsletter. So, Joe, I mean, we were just talking about it, right? The markets are reacting to the president's threat of more tariffs on European countries. In the past, we haven't seen the runaway inflation that everyone predicted because of those, tariffs that he put on back in April. So what do you think is really driving this sell-off here?
Yeah, so I think this is very much the Trump playbook. He likes to come out with something really strong that he can then, he assesses the market reaction. He sees, what the people that he's, competing with in the global sphere has to say about it. And then what he has done is and the reason why we've seen this situation sort of stay in check during the first year of his term has been because he's had the willingness to come in and, make compromises and scale back the original announcements that he makes. And he really he wants to threaten like the worst case scenario for people and then sort of walk it back slowly. And I think what you're seeing here is, these are some pretty extreme tariffs. He's saying he's going to put 10% tariffs starting on February 1st on 8 NATO members who have come out in defense of Greenland. And so that would be that would raise the effective tax rate quite a bit. If that were to actually go through, it would, of course, have to be approved and go into place. And there were a lot of steps where it would actually have to materialize. And so this is just like that first step, kind of the punch in the mouth. And Trump is at Davos this week. He's going to address everyone on Wednesday. And I think there's the reason why you mentioned futures were down more overnight than they are right now is because I would imagine people are expecting him to come in a little bit on this, and they recognize this as sort of the game of chicken that he often plays with the tariffs.
All right. So Kelly and I, Joe, were just talking about the marking of the first year of President Trump's second term in office. A lot of promises that he made to improve the economy. The unemployment rate is in a healthy range. But of course, as we know, the cost of groceries, housing, energy is all up. What does that indicate about the health of the economy overall? And I know, Kelly, you sent out a note this morning sort of diagnosing some of those issues. But I think for people who are watching us, if they are seeing that we are not in a free fall, as some had predicted, mostly Democrats, that we would be in a free fall, but they are seeing prices at home, prices in the grocery store rising, what should they understand about what's happening here? You guys can both sort of wax eloquent on that.
Yeah, so I think what you did see was inflation wasn't runaway. It wasn't horrible like many expected with the tariffs. And a big reason for that was that he walked a lot of them back. A lot of those initial, I think it was last April, Liberation Day is what we called it. A lot of those tariffs that he announced that day that tanked the market didn't end up coming to fruition. Variations of them did, but nothing as extreme as what he said originally. And you're right, in inflation, it's trending nicely towards the Fed's target of 2%. It's not quite there yet. The unemployment rate did decline. There has been a little bit of sign of easing of tension in the labor market. So, the economy this year is expected to grow nicely. Wall Street has really strong forecasts for both the economy and stocks, and especially in the first half of 2026. I think what people are worried about is maybe wanting to have his cake and eat it too. Often when we get a good result, it's we want to push for more. So when it comes to things like wanting to cut interest rates more than we have already, or to do things like additional tariffs, it kind of threatens to rock the boat in terms of inflation. But as of now, inflation has been moderated. There are some pain points. You mentioned the grocery store. That's been one of them. But in other areas like gas at the pump and in other areas of the economy, inflation has come down quite nicely.
Yeah, no, you're right. I mean, I think the gallon of gas is around $2.80 right now.
Yeah.
But yeah, I think overall, to just sort of put a button on it, Joe, Vlad, the metrics are good if you look at the top. If you're someone that's on the bottom, though, it's tough.
Yeah.
And we'll see how people feel that way. Joe Ciolli, thank you.
Thanks, Joe.